Hey guys, this is Hayden Harrington with Momentum Multifamily, and I just wanted to do a quick tutorial video today about how to analyze at a high level income, NOI, and expenses on a multifamily investment opportunity. So I'm going to jump right in here. I'm going to share my screen so that you guys can see. Now, this is the quick tool that we developed for investors to take some basic information that every investor will be provided when you're looking at, for instance, a webinar video or a PPM, the offering documents that kind of outlines the game plan, the business plan, gives you some information about the historical data, and then also your pro forma over the life of the investment as well. So with a few basic bits of information that every offering should provide you, you should be able to get a good high-level look at the income, NOI, and expense growth over that time period. And then you can take that information and make a more educated approach to these offerings and make a wise decision for yourself. And if you feel like that business plan and the numbers expected are feasible or not. So I'm just going to go over the steps. We've got 3 simple steps here for this tool. First step is just the asset information. So you'd put in, just for your record, you can copy and paste these tabs so you can keep track of the different investment opportunities. And then you can also compare them to each other as well, which could be interesting over time. But you just put in some basic information, the complex name and address, and then the vintage of that asset and unit count and purchase price. And then, so over here I have the key, these white cells are stuff that you put user data in. And then the blue cells or the navy cells are formulated cells. So for instance, if you bought this property at 21 million and it's 161 units, that's about 130,000 per door. And then all you have to do for step 2 is go to the historical data that deal sponsors should provide you when you're looking at investing in an opportunity, or that you can request as well. And then I would just take the net rental income. So that is their gross potential minus any economic vacancies, and then adding back in other income. So what's their net rental income? And then the net operating income. And so the difference between those two is your expenses. So you get an expense ratio as well. So you can see the expense ratio that they're currently operating the property with. And then you can see their NOI. And net rental income there as well. And then you go down to the pro forma, step 3, third and final step, really easy. Year 1, you put in the projected year 1 net rental income. So again, same as the first step. And then the net operating income that they are projecting for that year 1. It will again spit out an expense ratio based on the difference between your net rental income and your NOI. And then all you have to do down here is go to the last year. So if it's a 5-year hold, you select year 5. If it's a 6 or a 3 or whatever year they're projecting to exit at, that's the year you select. So in this example, we're projecting a 5-year hold. And then going in and doing the same thing as the previous 2 steps, putting in the net rental income and net operating income at that year 5. You can see the expense ratio, see if there's any difference between what the seller's doing, and then from year 1 to year 5. And then over here, we got some basic high-level statistics that will help kind of highlight the pro forma of the deal, see if it's feasible or not. So in this instant, we've got 27% total income growth over 5 years, which equates to 5.4% year over year increases. We've got a 20% growth in NOI, which again, 4% and so forth. So we've got a 13% growth in expenses and a 2.5% per year for your expense growth. So basically what this tells you is it can tell you, how much of a push over the life of this investment are the sponsors projecting to make. So on average, just organic growth typically is between 2 to 3% is kind of the, really 3% is kind of the standard organic rent growth or income growth. projected, and as well as expense growth. Normally you grow those hand in hand at 3%. That's kind of industry standard for organic rent growth. So anything over that, there's going to need to be a compelling story to be able to justify that income push. And then also, why I wanted to include the expense growth here is you've got to make sure that the sponsors aren't hiding trimming expenses too much or anything like that. You know, if they have, for instance, if this was 1% or something drastically below the normal, it just leads you to ask more questions so that you can be a more educated investor and make empowered decisions. Because, you know, deal sponsors can cut deals thin in many ways, whether they're projecting very aggressive rent growth or they're projecting very lean expenses. Both of those increase the NOI. So they're just something to pay attention to, and really just leads you to potentially ask more questions and understand the business plan, and make sure that this is a good fit for you and your investment criteria. So it's really just a high-level tool to be able to use with a few basic bits of information and give you the average over the life of the investment for your income, NOI, and expense growth. A lot of deal sponsors can hide income growth or expense growth within a 5 or 10 year pro forma, because there's a lot of numbers to look at. So they know that a lot of investors look at that year one number. So a lot of times they won't have much growth in year one, but in the subsequent years, 2, 3, 4, for example, they'll have extremely high growth. And so what this tool does is it averages out over that life of the investment. So you can see what the average push is. And if they're cutting expenses in years 2 through 5, for example, that will become very apparent on this tool. And same thing with income growth. If they're making a heavy push in year 2 through 5, but not so much on the front end so that they can, you know, try to make it look more conservative, this will become very apparent as well. So again, it's a very high level tool. Every investment, every property has a different story. Some may be significantly under market, need you can justify a heavy push. But for example, if something's leading the market, if there's not a whole lot of value add component, but year over years, let's say they're projecting this 5.4%, when we know that the average organic rent growth is 3%, you've got to ask yourself, is this really feasible? Is this strong enough of a market, or are we being too aggressive here? So the whole purpose behind this tool is just to allow you to become more educated and potentially spot risks down the line that aren't apparent at first glance. So anyways, I hope this helps. If you want a copy of this, you can head over to the link in the comments or in the description below, and you can head over to our website and get yourself a copy.